With this video, we are getting extremely close to finally hopping into the meat and potatoes of trampoline trading, but this will be the final pit stop within the education that we have to go over. We've got to talk about some of these strategy tools and ideals, and then we'll be able to start to hop into all the details from point A to Z, and then get into that nitty-gritty good stuff. So let's get started with this one, and then the next video you'll be watching, you'll be getting everything thrown right at you. So for you card players out there, hopefully you appreciate this analogy and it finds some favor with you. If you don't play cards like myself much, I think it's still an analogy that in the broad scope of things is still easy enough to understand. But at the end of the day, trampoline trading is all about stacking the deck in our favor. This right over here is probably one of the better hands of cards that you can get. I believe it is a full house in poker, as you can see by that comment right there. I'm not a huge card player, but pretty darn confident. Full house here, and this is what we're trying to get into our hands as traders. If we can get a full house, then you got to be feeling pretty darn confident about things. So in order to do this, and in order to kind of think about what constitutes having a great hand of cards, we're going to talk about the toolbox that we're going to need and the tools inside of it. We're going to talk about the ideals, and these ideals are all going to have different degrees and levels of importance, so we'll talk about those, talk about some pre-signals, and then look over some buy signals. Now, in order to succeed with trampoline trading, we're going to need some specific tools in our toolbox, and the first one we're going to need is just candlesticks. We're not going to be using a line chart or anything else. We need a candlestick chart, so that is just very basic step number one. We're looking at candlesticks here. Going to be using trend lines. Within the world of indicators, we're going to be using volume, the MACD, the 8-period simple moving average, and the 20-period simple moving average. Optional, you can use the 50-period and 200-period if you want in order to get the overall trend and context of things. However, by no means is it necessary in order to have success with trampoline trading. And for just educational sake, since this is just an educational setting, I'm not going to be having the 50-period or 200-period on any of the charts just because that creates more clutter. And not bad clutter, but from an educational standpoint, the more straightforward and kind of less stuff on the chart, I think it's the easier way to kind of teach and show what you want. So again, totally optional. I just won't be using them because I want to make this as easy to understand as possible. Now, these ones aren't necessarily tools, but I'm going to stick with that theme here. These are more of just skills and the ability. So you need to have the skills and ability to draw trend lines, and within that, identify support and resistance areas. You need to identify attractive candlesticks for the strategy. Just simply be able to identify trends. And when you're looking at, or when you're working with your broker, which I'm assuming is online, and you're not picking up the phone, you need to know how to enter in stop losses. So these skills and abilities, whatever you want to call them, will also be needed in conjunction with the previous slide when we talked about all the actual tools that you're going to be putting on your chart. Hopping back over to the card analogy here, I want you to focus on this graph, and it really sums it up. This stuff I just kind of put over there to help additionally, provide understanding if you're not too much of a chart or graph person. But right here, the ideal that we're looking for is we want as many ideals in our favor as possible. And ideal, let's just think about those as favorable cards. No matter what the card game, an ideal within that card game is something that's going to give us an advantage to win. So let's just go with the poker theme. The more ideals we have in our favor, then the closer and better probability we have to win whatever the jackpot is sitting here, in the middle of that table. So now when we hop over to just talking about it in a graphical sense, let's say that you have some pretty good ideals, and that lands you right here. So we're going to come up here and connect that to the line right here. Now, in order to figure out the probability of success, we're going to come over right here, and that would be our probability of success. Let's say you're looking at a chart and you're like, there's really not too much going on with this one. There's a couple things, but not much. When you come over here, look what happens now. Because there are less ideals in your favor, you're going to have less of a chance to succeed. Let's say you pull up a chart and it's holy smokes, look at this and that, all sorts of things in our favor from a technical perspective. Well, that means we're going to have a lot of ideals in our favor, which is going to put us up here. So that means that our chance of success is going to increase more even from this spot, but from the bad chart, it's increasing that much more up to there. So in a roundabout way and getting blunt and to the point, all I'm saying here is, and this isn't groundbreaking science or anything like that, this is actually hopefully pretty obvious, but the more ideals that you have in your favor, the higher the probability of success. And I just wanted to map this out. So remember this line. You want to be, when you draw your line up here, you want to be as high up in this portion of the line as possible. If you're down here, then you just really don't have enough ideals in your favor, and you can do much better. So I kind of just want to end with this on the slide. The one massive difference, and this is I think pretty powerful, and I always think about it is, but the massive difference between traders, so us, and card players is if we don't like the hand we're dealt, we can return the cards at no cost. This allows us essentially to stack the deck to our liking and preference. So we can literally stack the deck. Unlike a poker player, they're dealt a hand of cards and then they're stuck with it. They have to go with whatever they're given. Us as technical traders, we can look at the hand before we even decide to act on it, and we can think, I don't really like that, all the cards there. I'm just gonna, look for another hand of cards. So we're in poker, that would just be flat out cheating. Looking at the hard cards, determining if we want to use them or not, and then going forward. But in technical trading, that's just the smart way to do things. Look at your hand of cards. If you don't like what you have, then move on and find a new hand of cards. And when we finally find a hand of cards that we like, then we're going to go with it. So totally opposite from poker, totally opposite from cards. We get to determine whether or not we want to use the card, or I should say the stack of cards, before the game even starts. So a massive advantage in our favor and a massive difference between just card playing and us. So with that in mind, don't settle for something that doesn't have a lot of ideals. If it's not a good hand, put it back. If there's not a lot of good things on the chart and ideals, then just move on from it. There's always something else out there. So remember that, keep that in mind. We want as many ideals in our favor so we can get up here on this portion of the line and then end up really up here, high up here on the probability of success. Now the ace card of ideals, again, if you're not familiar with cards, the ace is, in the majority of card games, is going to be the card that you want to have. So the best thing that we can have in our favor is, hopefully you already know where I'm going with this, is the trampoline combo. Now, can you win without the trampoline combo? Sure. This isn't an exact science. You can absolutely win without it. But does having it make winning a bit easier? Absolutely, it sure does. No questions about that. It's just one of those cards where when we get it in our hand, our probability of success just goes that much further. And hopefully you understand this now, and you should, but context is king, and we want the context being the environment of gasoline and lit matches. So as you know, that's what we're looking for. Context is what we want, and when we have that, that's kind of that nice little ace card sitting on our hand, thinking, all right, we just really upped the odds of having a successful trade. Now, we talked about all the tools and skills and all that stuff that you need, but where do all that rank? Where are the levels of importance within those tools? And when you're looking at the chart, what is going to be really the driving force and what's going to kind of fall later on down the ladder. So first level, we just talked about, that's going to be the trampoline combo. We want a context where the things are just, it's like a dry hayfield with gasoline soaking it, and it's just waiting for that match to be dropped. That's ideal number one. Again, now, do we have to have ideal number one? No, we don't have to have it. But does having ideal number one put us way to the right on that graph that I showed, and then it's going to give us a higher probability of success? Yes. So an ideal that you should have, and that's what the trampoline trading is based around. However, you don't absolutely have to have it. Now, the second level of importance is going to be price action. Price action is, what is the price actually doing? Is it putting in higher lows? How is the price affecting the moving averages? So obviously price is going to dictate the behavior of moving averages. So what is that behavior? That's going to be very important. What kind of candlestick has formed? Again, price action is what forms a candlestick. So if we're getting an attractive candlestick, or maybe not an attractive one, got to pay attention to stuff like that. And then price patterns. All the patterns out there. We need to pay attention to those. Those are high in importance too. The third level is going to be volume, and we're looking for it above average volume in particular. Now, we'll go into things where you could I could argue the point where maybe this has a higher level of importance, but we'll address that specifically. But for the time being, with just baseline kind of bare bones foundation of the strategy, just look at volume as the third most important thing. And then the MACD is down on the fourth level. Again, price action is always going to be the king. Price action and volume, because those are what dictate how the indicators look. And indicators can be important, absolutely, and we're going to be using the MACD, but at the end of the day, MACD is going to be down at that fourth level of importance. So important, yes, but MACD is by no means more important than the price action or the volume or anything like that. Now this slide is the most important within this whole video, because being an advanced course, hopefully you've gone through the robotic trading video series that I've done. You should have this general chart knowledge, and general chart knowledge, when you try to put it in a ranking, it's just totally priceless. I mean, because you can do so much with it. As corny as this saying is, knowledge is power, it is the truth, because it gives you so much flexibility. The whole strategy, I'm going to be laying down the bare bones quote unquote rules, but with general chart knowledge, it's going to give you some flexibility. And it's a totally 100% case-by-case situation. I'm not going to be laying out hard ground rules of when general chart knowledge should be used and shouldn't. That's up to you, and it's a totally case-by-case basis. We'll go through examples where hopefully there's some things that are glaring obvious, that are bullish, that make the strategy easier to use, and then you can just go with that. Other charts are just going to have those attributes that while are important, they're just kind of fall into a different level of importance, so you should make note of them, but they're not going to be a driving force. So you'll have those secondary important levels too. But point being, when you understand charts, which I assume you do, you're going to have this general chart knowledge, and you're going to be able to kind of shape and mold things from a foundational perspective, which we'll go over. Then you can take that and shape and mold things into your liking, and kind of create the ultimate deck of cards, or hand of cards I should say, from the deck that however fits your preferences. So that's going to wrap up this video. We get into the good stuff now, but make sure that you understand how all those tools work. Make sure you have those skills and abilities. I know I've said this before. If you haven't, then you're definitely going to need to know those supports, resistance levels, how to find all that stuff, or you're going to have a very tricky time with that. But so if you don't know that stuff, go learn it. But if not, let's hop on in the next video and really get into the nitty-gritty good stuff.